What do you make of the decision by the MPC?
Well, I would imagine that across board, there's some sort of a sigh of relief, because going by a couple of statements in the last 1 week by the CBN governor in London, it was neither here nor there. I mean, there were indications that there could be a little some kind of adjustment, but he did leave a caveat though, that with the government, if the government increased spending in line with the expansionary outlook, then rates could rise. But in a way, I would say I'm glad, and I would imagine many others are, that it takes us back to where we were at the end of the year, so to speak. Some kind of outlook as to, okay, now where do we go from here? We just had multiple increases last year, and we need to I think the overall consensus is that we need to allow the time for the impact to take full effect on the economy before we talk about another adjustment. So I think it's all good. And it's a positive development. Okay,
William, always when we have the MPC, the government invariably comes into focus, and it is this criticism of unbridled spending on the part of the Nigerian government. We know that this year the budget is going to be a little bit restrained, but does that mean there's going to be less borrowing on the part of government?
No, you see, as it is, I would imagine there will be some recalibration of the budget over the next couple of weeks in the light of the recent strike. But the government has always had a position that it's focused on infrastructure development, it's focused on expansion. So naturally, I do not see government making a flip-flop on that broad strategy. The details may change, and there might be some adjustments, but the government has made it clear it's an expansionary budget. But there's going to be a lot of work on fiscal discipline, cutting waste and avoidable expenditure, which obviously is was on the front burner right now.
I mean, the reason I'm asking about government borrowing is what impact that has on the bond side of the market, because the largest player there really is the government. FG bonds usually set the tone for corporate issuances and the rates at which people will borrow. Nigeria's had some very attractive rates, swaying between swaying between 14 and 19%. Will those trends continue with interest rates kept stable at 12%?
In my opinion, yes. Like you rightly said, that's been the trend. And I was just going to read an article recently. There were some concerns about government's, in quote and unquote, increased appetite for borrowing. Now, in my opinion, in the short to medium term, that trend will continue. But what's probably going to happen is that, again, like I said, unfortunately, that has its downsides for corporate borrowing in terms of, I mean, an average corporate bond will have to be looking at about 18% to be competitive. But by and large, government has options, yes, but we have to keep in mind that overall, the bond market seems to be, I don't want to use the word a quick fix, but it does seem to be one of the readily available options that I am inclined to believe in the government will take, in addressing its fiscal needs. I mean, it already, there are concerns, yes, that the figure might hit the ₦1 trillion mark this year. I expect that there will be some moderation going into the year, but that trend is in the short to medium term will most likely continue, in my opinion.
And very briefly, we do know that corporate issuances now on the bond market stands at something like 13. You've just mentioned the competitiveness of corporate bonds versus government bonds, but there's also the subnational bonds, states also coming to market. So for investors that don't really know which to buy, what would you say?
Well, that could be a tricky bit. Why I use that term is because overall, on a balance, federal government bonds will always take top notch in for options in front of the investors. The state bond, if you look back into last year, a number of states came to the market. Now there were concerns about about investment in those bonds, but really and truly, the culture is developing. And the states, we look at Lagos states, the financial standing of the state is by all means credible. And what I see happening is the momentum that we saw last year would gradually grow into 2012. And I guess investors will have to take a closer look at the fiscal policies of the states from the onset, and the track records of their culture, spending culture.